Hey, Puppy Trades! I want to do a video analysis update of the stock market for two people. Just two people, right? We got Jason and Naresh. It looks like they're not all out yet. I still got two, I still got two left. And you know what? As long as there's someone left, I'll keep making the damn videos. I'll keep doing it. I'll keep posting on Finchwit. I'll fucking do it. You know what I mean? Jason and Naresh, this video is for you. And honestly, I don't know what I'm going to talk about. I don't. I really don't. But I'm really going to try to ask myself, what would Jason and Naresh want to know? Right? What would they want to know? Well, the first thing they want to know is what is the Elliott wave evidence that was given this week? And that's a very easy question to answer, right? So a lot of and remember, that's a very specific question to answer. The Elliott wave evidence, not the classical trading evidence, right? The Elliott wave evidence. What Elliott wave evidence was given to anyone this week? Well, I think the bulls got a big piece of evidence from a stock called Nvidia. So the argument for a long time was that this was a large wave one subdivided into 1, 2, 3, 4, 5 waves up. This was an ABC correction between the 61.8 to 78.6% retracement of the rally from the 2018 low to the 2021 high, right? So the bears were saying for a while, that this was a wave A. Wave B was going to end below this high, and we were going to see Nvidia take a wave C down below 100. That just was honestly the Elliott wave argument for bears. That's wave A. Wave B won't break a new all-time high. We're going to see a wave C below 100. That was the argument. I know it sounds silly. That was the bear argument. Nvidia has exploded to a new all-time high. So what's now the bear argument? Well, the bear argument is that this is an expanded flat, right, in the long term, right? Because even in the bull picture, Nvidia could pull back and go higher and still be perfectly fine. Like, let's just make that clear. Nvidia could pull back, go higher, and that's completely aligned with what would honestly be a pretty conservative bull estimate, right? I'm not saying I'm going to short Nvidia. I'm not saying that Nvidia isn't going to go below off top to 500 immediately. What I'm saying is that if Nvidia did pull back, it could go higher and still be in a long-term bullish cycle from an Elliott wave perspective, right? But what the bears are going to say now from the long-term perspective is that they have to call this an expanded flat, right? So an expanded flat is basically a fancy way of saying that they were calling for wave A, wave B not to break a new all-time high, and a wave C lower below 100. An expanded flat is when the wave B is allowed to break the wave one high, in this case, the all-time high. So they're going to say this is wave A. This is an expanded wave B. And so they're going to say this is an expanded wave B. We're going to have a wave C. Okay. That's it's a possible argument. It's not a very good or likely argument from an Elliott wave perspective. So I'm not here to take a victory lap on Nvidia. I don't care. I really don't. But to answer Jason and Naresh's question, which I think they might have, yeah, the bulls did get a little evidence from Nvidia this week, because if we look at SOXX, we saw a while ago, a long time ago, this possibility that this was a wave 1 and a wave 2 and a wave 3, an ABC correction wave 4. So I've been looking for quite a bit that SOXX would go hold above the 78.6% retracement and this wave 1 high of 267 and go break to a new all-time high. So the length of wave 3 placed at the wave 4 low would give a wave 5 target for SOXX up to 677. Now, I know this sounds like voodoo. I was using the fact that this was the largest RSI reading ever for SOXX as evidence that we would see another high get broken. And the reason for that is because in Elliott wave theory, wave 5 must end with momentum divergence, and wave 5 is the last wave of an impulsive structure. So because this was the highest RSI reading we'd ever seen for SOXX on the monthly RSI, that suggested this wasn't a large wave 5. It was either a wave 1 or a wave 3. So we would see another rally take place, and I do believe that's going to happen. So in the big picture, I think bulls, yes, did get evidence that in the long term, SOXX, from an Elliott wave perspective, is expected to break 559, even go the length of wave 3, place at the wave 4 low into the mid 600s. But at the bare minimum, break 559. If we look at QQQ, we see in a very similar idea where if I'm looking for SOXX to break a new all-time high, then QQQ would also, in theory, be following Nvidia. Now, QQQ has a little more closer piece of evidence, and what was very interesting about this week is that this kind of got thrown under the table. This is one of the largest holdings of not only QQQ but also SPY. We see Microsoft now not very far at all from an all-time high. So very similar to Nvidia. Wave 1, wave 2, wave 3, ABC correction, wave 4. And the length of wave 3 placed at the wave 4 low, or I should say very similar to SOXX, could take Microsoft all the way up to the lower 400s, call it the 430s. But from a bullish perspective, from an Elliott wave perspective, I should never say from a bullish perspective, because the truth is I'm more prepared for the stock market to crash than the bears. And so right now what I'm having to balance is the balance between giving my Elliott wave perspective and how I'm positioning myself towards a bias, and my risk management perspective, long gamma positions like straddles and strangles, positions in covered call ETFs, positions in commodities, positions in, more income oriented, inflation protection assets. I'm having to balance, do I share what I'm doing quantitatively or from a technical basis, what my bias is. And right now the truth is, it's just I have to take advantage of the fact that the market is going up and doing what I said was going to happen, right? Because I give targets, I give stop losses, I give invalidation levels, and more importantly, more than all else of that, I am positioning myself and developing a bias based on these things. And I'm also developing a what if I'm wrong position. What if things don't work out the way that I think? Or what if I am right, but the market goes sideways for a long time and premiums get destroyed? Those buckets are just as important for me to develop. But right now, the technical bias, kind of side, that's what I have to push. Because when the market was going down, people who didn't even give stop losses, they didn't even give targets, they didn't even give really, any type of detail about what they were thinking was going to happen, they made millions of dollars in subscriber fees. They grew their accounts from being the size of mine, 25, 30,000 followers on Twitter to, 200,000, 300,000. I tried to roast one of them, and one of the robots of that account replied and said, like, thank you, come sign up for our service. Like, right, so they're in a league of their own. They're making money from Discords, $80 a month, $100 a month, subscribers. That's not where my money is coming from. I'm literally paying my bills with covered call ETF, distributions and dividends, and you know, the real reason I invest in things to give capital appreciation. Like I'm invested in Phase Energy and Tesla. I'll go over those setups in a second, and Bitcoin as well. But the real reason that I'm invested in things that give capital appreciation is either for inflation protection or to make an upside return and use the gains to get higher dividends, not from paid subscribers, but from covered call ETFs and dividend paying stocks, and even, of course, blending them with equity assets related to the Nasdaq, the S&P 500, and foreign markets as well, right? But that's all a fancy way of saying that right now the bias bucket is looking good, and I give uncanny targets, and uncanny targets have been hit for Nvidia and Microsoft and Tesla and Bitcoin many times before they're about to be hit again. The Nasdaq, Apple, the S&P 500. This isn't the first time. It's not the second. It's not the third. Not for Bitcoin, not for Tesla, not for Nvidia, not for AMD, not for the S&P 500, not for the Nasdaq. And so what I'm saying again is that we could see now Nvidia is at an all-time high, right? Nvidia broke to an all-time high in May of 2021 first, and then Facebook shortly followed, and then the rest of tech followed. Okay, we're about to see, in my opinion, Microsoft break to an all-time high. In the same way that Nvidia leads SOXX, I believe Microsoft will be a somewhat reliable leading indicator for the Nasdaq. That we're going to see an all-time high for that too. And if the Nasdaq, Microsoft, and Nvidia are at an all-time high, it would be hard to bet that SPY isn't also going to impulse go from filling out the left side of this base to the right side of this base towards an all-time high as well. So I guess this is pretty short-term analysis. I think In-Phase Energy and Tesla are two that I'm looking at that haven't really followed Microsoft or Nvidia yet. Wave 1, Wave 2, Wave 1, Wave 2 for In-Phase Energy. At the 78.6% retracement, this could be Wave 1, Wave 2, a Wave 3 being entered. The length of Wave 1 placed at the Wave 2 low could take In-Phase Energy on a Wave 3 up towards the 370s, the 380s. Tesla, we're getting very close to seeing Tesla break this Wave 1 high in the short term. So this was a Wave 1, an ABC Wave 2, and Tesla soon could be above 217.65, ideally above 77.42 on the daily RSI as well. Confirm it's within a Wave 1, an ABC correction Wave 2. The length of Wave 1 placed at the Wave 2 low could take Tesla on a Wave 3 up towards the 260s, the 270s, and that would be a daily target for Ford. I know we saw in the media that Ford was, being partnered with Tesla. That was why this was happening. I do think Ford's got a pretty bullish setup. I'm not sure which one of these lows is the low. I think it's this, but I think this is 1, 2, 3, 4, 5 waves up for Ford. We look at this weekly RSI. This is the highest weekly RSI reading. I think that is a Wave 1 and a Wave 2 between the 61.8 to 78.6% fib. So yes, I do think we'll see Ford enter a Wave 3. Camping World, I'm in Camping World. It's got a similar kind of Wave 3 look from the auto sector. I'm not trying to extrapolate into these fundamental connections that were being given, but if the idea that Tesla and the auto sector as a whole are going to rally, I do think that's pretty interesting. And I think that the charts are kind of supporting that idea that Tesla enters wave three, Ford enters wave three, and potentially even other auto stocks like Camping World, like General Motors enter wave three. For Bitcoin, I think that Bitcoin, I've charted BITO a little more in the big picture. I think this is a large wave one, an ABC correction wave two, and we could see Bitcoin enter wave three. I think BITO, however, gives a little prettier count. I'm also in BITO, so it just makes a little more sense for me to discuss. From the daily chart, I think this is 1, 2, 3, 4, 5 waves up, a large wave one and a wave two. So I'm going to move this over for BITO. It looks like it ended a wave two between the 50 to 61.8% retracement of this wave one. So this is wave one and wave two. I think that this is another wave one and another wave two for BITO. So I'm going to keep holding BITO, and I'm expecting that there's a good amount of evidence that we could see Bitcoin and Ethereum enter a wave three of wave three. I'm not correlating Tesla or In-Phase Energy or Bitcoin or the Nasdaq with Nvidia. I think Microsoft is pretty correlated with the Nasdaq and the S&P 500, and Microsoft could soon be in a new all-time high. So from a classical trading perspective, that doesn't matter. From an Elliott wave perspective, it does. For example, if we look at advanced micro devices, I'm not really trying to get into the super daily charts, but in the big picture, a very similar argument was being made about advanced micro devices, and that this was a 1, 2, 3, 4, 5 waves up, wave one and a wave two. So I was expecting in the big picture, just like Nvidia, we'd see AMD enter a wave three of wave three. If we look in kind of the short term, I subdivided it more recently. I said this is 1, 2, 3, 4, 5, large wave one, wave two. AMD broke above this new high on the weekly RSI, suggesting it was within wave three of wave three. Again, I think the bigger, idea is that, I'm still bullish. The Nasdaq, I'm still expecting the Qs to hit an all-time high. I'm expecting the S&P to hit an all-time high. But it just doesn't really seem like I'm, giving myself fair competition. No one makes these price targets that ever get hit the way mine do and hold above the stops that I say they're going to hold above. And they definitely don't even have, I have more downside exposure than the bears. My, risk management strategy is such that if the market keeps going up, I can keep raising the strike prices on the straddles and the strangles that I have, and I can literally keep going up and raising the strike prices on my METV straddles and strangles and my PSQ and my SH straddles and strangles. Since they inverse the S&P and they inverse the Nasdaq, I would lower the strike prices on those. And there's just a lot of things, and even without any options, I've got a substantial basket of covered call ETFs and dividends. And the point is, I think SOXX is going to hit an all-time high. I think the Nasdaq will hit an all-time high. I think AMD and Tesla and Microsoft will hit an all-time high, and the S&P in the big picture. I'm not really sure. If my followers on Twitter keep going down and my subscribers on YouTube keep going down, I'm not really sure who I'm competing against, because I'm not competing against bears who give downside targets and upside stop loss levels. I mean, what were the bears' risk management strategy for this? Like literally, like just ask yourself that. What were the bears' risk management strategy for semiconductors exploding 5 months ago? Did they have upside delta? Did they have straddles? Did they have strangles? Did they have married puts? Did they even talk about that stuff? You know, are you just gonna pretend that their puts didn't decay to nothing and that their short positions didn't get margin called months ago? And the truth is, a lot of people will, right? So I'm just not really sure what the point is. I think the big point is I got Jason, I got Naresh, right? And maybe it's good for the Bulls. My subs, my followers keep going down. while the market keeps going up, because that's what I think is going to happen.